Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's episode is sponsored by ARC Silver Gold Osmium. They offer personal service and often the lowest price, period, with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the great things people had to say about ARC SGO and owner Ian Everard on this channel. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy PMs, I recommend Ian at ARC. He is a straight shooter. I purchased a lot of silver from ARC. So visit their website at arcsgo.com. Contact Ian Everard at 307-264-9441 or by email at ian@arcsgo.com for all of your precious metals needs, and make sure to tell him that Commodity Culture sent you. And today's guest is an expert in the precious metals space with over 20 years of experience, a director at the Gold Antitrust Action Committee, and the founder of Ed Steer's Gold and Silver Digest. It's Ed Steer. Welcome to the show.
Well, thanks for having me on. I appreciate it, Jesse.
Appreciate having you on. I want to start with a broad overview of the precious metals space. You can take this question wherever you'd like, but what are the main themes and trends that you're watching when it comes to gold and silver that you think more people should be paying attention to?
Well, the things I'm really looking at in this precious metal space, especially in gold and silver, is I'm looking at what's going on in the COMEX futures market. This is where the price of most commodities, especially the four precious metals, are set. It's not set in London, and it's not set in Shanghai, although there's lots of action going on there. The daily price that we see and we look at every day is what goes on in the COMEX. And from a COMEX futures market perspective, both silver and gold are in very bearish configurations from a price perspective. They haven't been this bearish in years. And I know that the bullion banks and commercial traders would love to get the price down, but they're having issues right now. But that's the thing I'm watching the most. And the other thing I'm watching very carefully is the in and outflows in silver and physical silver in the COMEX, on the COMEX and in the various ETFs, especially SLV. Silver analyst Ted Butler has been watching this for the last 10 or 12 years very carefully, and the amount of silver going in and out of these institutions is just absolutely enormous, which indicates that we have a real serious supply problem in silver. And as everybody already knows, the Silver Institute, we've been in a structural deficit in silver now. This is going on the fourth year. And I think the deficit this year was forecast by the Silver Institute. The latest number was 215 million ounces of silver demand over silver supply. So between what's going on in the COMEX futures market, where the price is set, and what is going on in the silver ETFs and the COMEX physical inventories, those are the two things that I'm keeping an eye on the most.
Well, you were mentioning silver and gold being in a bearish pattern. Does that mean you expect prices to go lower before they eventually go higher?
Well, what's happening is that we had the high in gold and silver I think it was last month, middle of last month, and they've been trying like mad ever since then to drive prices lower, and they succeed some days, and some days it blows up in their face, and then they come back and they try again, and in the last week or so, we've had big up moves and big down moves. So the bullion banks and the other big commercial traders are definitely trying to get the price down. And of course, we had the CPI number and the Fed meeting results today, and you can just tell by looking at the trace that they were all over the prices today. But they desperately want to get the price down, because if they don't get the price down, sooner or later they're going to get overrun, because this physical deficit in silver is going to be the end of them sooner or later.
Well, I want to touch on something you wrote in one of your recent articles. You said if the silver price was sitting just below its all-time $50 high, like gold is currently just below its new all-time high of 3 weeks ago, it's a given that the silver equities would be outperforming their golden cousins by several orders of magnitude. So we have seen a small jump in the silver mining sector since silver's price went back around the $30 range. We're sitting just below that as of this conversation. But for the most part, not the type of move that most were hoping for. Give us your thoughts on the silver mining sector and the catalyst that could drive those equities higher.
Well, the problem is that if you watch the the problem is if you watch the daily shenanigans in silver, silver wants to blow sky high. Everybody can see that from the traces on the charts. But the bullion banks never allow silver or gold to get on a real head of steam where it's allowed to trade freely. Every time it takes off, and the silver today is a poster child for that. You take a look at gold and silver. They took off on the CPI number this morning at 8:30, and it was crushed immediately before as soon as the equity markets opened. The silver stocks were sky high earlier in the day, early in the trading session, and by the time the trading session was over, they finished mixed. Some were up, some were down. So the fact of the matter is they're just not letting anything physical like silver, gold, platinum, and palladium take any override what's going on in the paper market, in bonds and stocks and things like that. If they were allowed to trade freely, which then we would see, like I said, you would see the silver stocks outperforming the gold stocks by many orders of magnitude, because gold's at 20, almost 2,200 or what, 2,300, and if silver was even at $45 or $47 an ounce, you would see the silver stocks 2 or 3 or 4 times what they are today. And it's going to take the bullion banks are going to have to either give up on this price management scheme, or they're going to get overrun. And that's when we'll see the silver stocks outperform. And of course, once they let silver go, gold will follow, and they'll all take off. So as long as they're sitting on the price, we're going to see the silver stocks underperform, and they've been doing that all year, as have the gold stocks.
Well, talk about that price management scheme a little bit for us, because a theme that comes up time and time again when discussing precious metals is market manipulation. So I wonder what your view is on how manipulated gold and silver markets are. And for those who are maybe new to the space, maybe you could talk about the main players involved in this price suppression and the ultimate, what is their ultimate goal? And you said they might get overrun. How do you see that all playing out?
Well, this is not something that's just started in the last 5 or 10 years. When Nixon took the United States off the gold exchange standard in 1971, the price management scheme in the precious metals began almost right away. And the gold futures market didn't start until 1975. And once they have a paper market, they began suppressing the price immediately. And this has been going on for more than 50 years now. So this is not something that just came up the other day. Basically, what they're doing, the world is now operating for the first time in its history on an all fiat, all paper currency scheme worldwide. And what this price management scheme is the attempt by the central banks of the world to keep everybody on paper assets, whether it be bonds or stocks, which is something I spoke of just a few minutes ago, keep them on the paper asset side of the street instead of going onto the hard asset side of the street, which is anything commodity related, whether it be oil or tin or rubber or cocoa or whatever, especially the precious metals. They don't want people going from soft assets to hard assets. And this is the entire scheme that's been going on for the last 50 years. But the paper currency scheme that we know it today, whether it be the US dollar or the yen or the pound or the euro or whatever it is, this is all coming to an end sooner or later. And we're in the final stages of that, and their desperation to keep precious metal prices suppressed is becoming more desperate all the time. The main players in this, besides the central banks, they use the bullion banks as their proxies. Most of them are U.S. based. There's everybody likes to pick on J.P. Morgan for obvious reasons. There's Citigroup and Wells Fargo, and I'm sure I've forgotten a couple in there as well. Some of the British banks are involved. Standard Chartered would be one of them, and then there's PNB Paribas in France. And I'm surprised, being a Canadian, how involved our own banks are in this. Bank of Montreal, Royal Bank of Canada, Scotiabank. I've been watching the deliveries, issuers and stoppers for decades now, and the amount of participation by Canada's banks, especially in the last 2 or 3 years, has been absolutely astounding. So it's been the Western central banks, whether they be U.S., Canadian, or British or French, in this ongoing half-century price management scheme that is definitely on its last legs. And it's incredible to watch what's going on. And I know the next questions are going to come up about what's going on in the Far East, but this is not just a fiat currency problem. It's a West versus East situation. And we're in the death throes of this. And unfortunately, as we just mentioned, the silver and gold stocks and all commodities in general are suffering because they're trying to keep the wheels on this thing for a little while longer.
So what is the timeline that you see for this sort of price suppression potentially coming to an end? Is this a time when you would actually stay out of the metals and commodities, or do you think it's worth kind of staying in, holding on, and waiting for the inevitable end to this whole corrupt system to play out?
Well, as my readers know, I've been all in on the precious metals probably for 20 years now, which has been a blessing and a curse. I've done very well because I remember I think I bought silver wheaten, or way back when, for like 90 cents. Now it's trading for like $40 or $50. So, I've had some great moves, but being in the precious metals for 20 plus years has not been the greatest, but I've done very well for myself. But now, as far as I'm concerned, with the paper financial system coming to an end, and the bullion banks and the central banks of the world fighting it all the way, the currency debasement is becoming absolutely enormous as they try to print their way out of this thing, which of course it's either print or die until it becomes print and die. And I'm still all in on the precious metals, and I'm even more convinced that's the place to be. And I haven't changed my allocations one bit. Matter of fact, I've been adding to them for the last couple of years in preparation for whatever's coming next. But this paper financial scheme is on its last legs, like I said before, and when it does finally surrender and end, then the only thing that's left standing will be the hard assets in general, and gold and silver in particular, because they're the two monetary metals that have been around with us for the last 5,000 years.
Well, I want to get your take on the de-dollarization trend and how that is evolving. President Putin making an announcement that the BRICS will be creating an alternate payment system. He announced this at the St. Petersburg International Economic Forum recently. How does this change the current picture for the US dollar? And do you think that ultimately gold will be involved in this new payment system?
Yeah, well, the Bretton Woods Accord, which was struck way back in 1944 or whatever, came to an end in 71 when Nixon took us off the gold standard. And since then, the United States has become a real rogue nation, and they've overthrown governments. I don't know how many, everybody knows, in Central America, South America, Africa. And the latest one, of course, is the Ukraine starting in 2014. And the rest of the world, which has been beaten up pretty bad by the U.S., either financially or economically, or they've been overthrown countless times, had their currency debased thanks to the U.S., they're sick and tired of this. I mean, they've never had a real champion. Russia was a communist country up until they finally gave up the ghost in the early 1990s. Putin's been in power, and Russia's come from basically the graveyard to the number 4 economic power in the world, as of, I think the World Central Bank, or the BIS or whatever, said they're now the number 4 economy in the world, into China, which was nothing when we were kids, or when I was a kid anyway. They were nothing. Now they're the number 1 or number 2 economic power in the world, and the U.S. is getting absolutely bludgeoned to death by China, and they're just not prepared to stand for this. So now we're seeing with China and Russia and India, especially India as well, and Saudi Arabia, now rising to huge economic prominence in the world. They finally decided to put their foot down and said, we're going to stand up against the U.S. and we're going to create our own system, different out of the IMF, and do their own thing. And it's going to have some commodities backing to it. It's not going to be a holy paper currency, whatever they decide to come up with. And not to be forgotten is yesterday or the day before, Saudi Arabia, or I think it was on the weekend, Saudi Arabia didn't sign an extension to the 50-year agreement they had with the U.S. to pay for all oil payments in U.S. dollars. And now they're prepared to accept alternative currencies. So the world is changing around us real quick. And, we're sort of in the middle of this, and to really forecast how this is going to turn out and over what time scale it's going to evolve in is really hard to say. Everything's in a state of flux, but the U.S. and the West, quote unquote, the West includes Canada and Europe and Japan and, England and, the West per se, are not taking this kindly or lightly. And it's all coming to a fore, with China and Russia on one side and the rest of the world on one side, and the West on the other. And it's starting to show up in places like the Ukraine, where this war that's been going on, which, it's the United States precipitated by the overthrow of the government there back in 2014. So, we're living through a very tumultuous time in history right now, and the so-called quote unquote third world countries of the world have grown up, and they said, we've had this. We're not taking it anymore. And the fight is on, and it's both military, economic, financial, monetary, and of course it's showing up in the precious metals, and they're just one of the other things where the war is being fought, and sooner or later the West is going to lose.
So outside of this BRICS versus the West situation and a potential gold being involved in an alternate monetary system, how do you see gold and silver's role up ahead? Do you see it being reintroduced as money at any point? Because the vast majority of people have no idea of gold and silver's history as money, or it's just some distant thought, but it's not something that they can even conceive of. Most people think it's an alternative investment class, a collectible, something like that. So in the case of a fiat currency collapse, I don't see it being so easy for your average person to recognize gold and silver as money if it were to devolve into some sort of, or evolve, depending on how you look at it, into a barter system transacting with gold and silver. So I just wonder how you see all that playing out.
From a Canadian, American, British, Australian, New Zealand point of view, we haven't seen gold or silver in our currencies for 100 years, or in the case of silver, since the 60s. I know from the BRICS point of view that both China and India are dead set against having a gold-backed currency of any kind. For obvious reasons. They like their fiat currencies, but the Russians, if they really had put their mind to it, they would go back on a gold standard tomorrow. They're quite capable of doing it. They have the financial reserves to back it. They have a strong economy. They got all kinds of gold reserves, either in the vaults or in the ground. But as far as the West is concerned, and the fiat currency system generally, if you're looking at all of them in total, okay, whether it was the euro or the dollar or whatever, sooner or later there's going to be a crisis, okay, in not just the U.S. dollar, but in all fiat currencies. And I think maybe if we have a crisis like that, and the people decide, we just don't want the money, okay, they're going to be forced to go back on some sort of gold standard. But I can tell you right now that they will not do that unless they're absolutely have to, because if you have a fiat currency system, then you get to control the people, and if the people won't use it, then they're going to have to go back to that. But it's like I said, they're going to only do it if they absolutely have to. In the case where paper money in extremis reaches its intrinsic value, which of course is zero.
Well, we touched on silver miners earlier. I'd like to circle back and get your thoughts on the gold mining space. Is that an area that you're currently seeing value? And if so, are you looking at explorers, developers, producers, royalties, all of the above? What are you seeing right now when it comes to the gold mining sector?
Well, the gold mining sector is the same as the silver sector, except, of course, gold is the king of precious metals. It's the king monetary metal. And nothing that can be said about silver that can't be said about gold as well. I mean, gold is trading at $2,400 an ounce or whatever the heck it is. If it was allowed to trade freely, what price would it be? I mean, pick a number. I mean, if the bullion banks turned off their computers, the short position in the COMEX is so ugly. Ted Butler's been following this for years, and it's just the ugliest it's ever been. And if the shorts were forced to cover, okay, in a free market situation, because there's no free market discovery allowed in anything anymore, including the precious metals. The short covering rally in everything, rubber, cocoa, tin, whatever there is in the COMEX or the LME, as the shorts rushed to cover when they realized there was no bank protecting them anymore, we would see prices of everything at absolutely astronomical prices. Gold, pick some 5-digit number, because it would be there. And silver could be 4 digits for a while, but even as it stands right now, silver should be some rather large 3-digit number, $200, $300, $400 an ounce, based on the supply-demand fundamentals and the way it comes out of the ground. So to say that gold is different than silver is not quite true. They're both the same, but gold is not in the structural deficit as of yet, but the demand is so high that I know the LBMA is having trouble providing it, like they are even more in silver. Like silver is even worse for them. So all the precious metals, whether it be, and platinum and palladium, are both in structural deficits for their second year now. So these low prices are having an effect on mining production. So whether it be gold, silver, platinum, palladium, tin, cocoa, zinc, copper, and copper is another one where the supplies are super low, and it's just not worth the while for them to go out, explore, develop new mines. Gold is, you can take gold and the entire commodity complex, because it's been suppressed for the last 50 plus years, throw them all in the same boat and realize that the commodities complex in general, and the precious metals in particular, are the buys of the century right now. And because of the currency debasement and the end of the dollar hegemony is at hand, that's the only place I would be. And gold is, of course, one of the ones, but I'm really a silver man. But hey, if you want to go for gold, that's fine. But silver is where it's at.
And why is it that you prefer silver over gold right now? Is it just that it's so much more undervalued?
Oh, absolutely. I mean, I remember arguing with my coin bullion dealer in Edmonton when I was living in there about it was a 5-ounce round, and he wanted $35 for it, and I asked him if he'd take 30 for it, and here I am arguing about nickels, and now you want a 5-ounce bar? You're going to pay what? I don't know, $180 for it, and even for silver at $30 an ounce or whatever the heck it is in U.S. funds, that's only a fraction of what it's worth. So, I have some gold in my portfolio. I mean, I'm not completely oblivious to the stuff, but the value is in silver, and the structural deficit, according to the Silver Institute, is in its 4th year. And silver analyst Ted Butler has been beating the drum for silver for just about 40 years, and he's a world authority on that. And when you look at all the numbers, silver is the place to be. But I'm certainly not throwing gold out the window. But if you want best return for your buck, the silver deficit's going to eat up the bullion banks sooner or later.
So I want to talk about some recent news, and that is Senator Mike Lee, a Republican senator for Utah, recently introducing legislation to end the Federal Reserve. Now, this sounds fantastic in theory. Is this something that could actually come to pass in the current economic and political environment?
Well, everybody wants to end the Fed. Everybody realizes what a parasite it is and how it does more damage than possibly be imagined. More people are waking up to that fact, by the way, that the Fed is pure, unadulterated evil. But there's no chance this bill's going to pass. The Fed is just too powerful. The central banks are too powerful. The last administration to tangle with the Fed was John F. Kennedy back in the 1960s. You're not old enough to remember that, I don't think, but I certainly am. And he was going to take the money printing from the Federal Reserve and give it back to the Treasury Department. And a week later or whatever, he met his demise. So there's the Fed is extremely powerful, and unless there's some sort of revolution or meltdown, I don't see them losing their power anytime soon. But they are the root of all evil. There's no question about it.
Absolutely agree with you. Pure unadulterated evil, the way I look at most of the political class in general, in addition to central banks. Now, when you look out into the world with the current global conflicts on the rise, the shifting of the geopolitical landscape, what are the main things that have you concerned, and how could this all impact the precious metals?
Okay, first of all, what you're seeing happening out there, whether it be in the Ukraine or the Middle East or any place right now, is not happening by chance. This has been premeditated, preordained, and planned by the globalist elite for years and years and years. If you've read G. Edward Griffin's book, The Creature from Jekyll Island, or John Perkins' Confessions of an Economic Hitman, or any other book like that, you realize that the powers in this world are so behind the scenes, are so enormous. Whether it be the Bilderbergs, or you call them what you want, World Economic Forum, there's people behind the scenes that have enormous power, and they're pulling the chains, they're pulling the strings right now. The Ukrainian conflict and the Middle East are all part of it. And so is this thing with the U.S. is going after Taiwan and China. This thing could all blow up too. This didn't have to happen, but it's been planned to happen. And I can't. This thing is deteriorating quicker than I could possibly have imagined, or anybody could have possibly imagined. If you take a look at what's going on, especially between Russia, Ukraine, and the West right now, and NATO, I don't see anything good coming out of this. I expect, it should have had an effect on precious metal prices now, for heaven's sakes. I mean, take a look at what happened in the price action today, which is Friday, with the CPI news, the Fed news, and they all blew sky high. And of course, the boys came in and hammered them down, and they're only up a fraction of what they were. So they're keeping everything suppressed, but they can't keep it suppressed forever. And I think there's going to come a point. I don't know when it is in the future, but it's coming, that this whole thing is they're going to let the whole thing go. They're just going to turn off their computers and let the chips fall where they may and let the system crash, and we're going to get a great reset of one kind or another: financial, monetary, prices of commodities in general, and including in that is this new thing that came out, the Great Taking, where they're talking about you could lose everything: your accounts, your bank accounts, your stocks, everything. So the financial system, the fiat currency system, is all coming to an end, and it's all going to be buried in war. It's unfortunate, but that's what it's come down to. And physical precious metals in hand is where you should be first, and then it's stocks. And I would have a fair amount of cash laying around, because when this happens, I think the banks are going to close, and who knows which ones are going to open, and it's a mess. And I can tell people right now that you should be protecting yourselves in the way I described, because this is all going to end very, very ugly, and there's nothing that we can do about it except hope that we're not collateral damage when it's all done.
Very well said, and great conversation, Ed. I really appreciate you coming on the show. For those who want to learn more, tell us about Ed Steer's Gold and Silver Digest, where people can find that and what it is you do there.
You just said it now. It's Ed Steer's Gold and Silver Digest. Google my name, just Ed Steer, Steer, Gold and Silver. my website will pop up, and there's a tab on there where you get a free sample column, and I just go into the general description of what's going on in the precious metals market on a daily and weekly basis. And you get about 250, 260 columns a year, and the freight is US $100. And if what you read is something you'd be interested in, well, I'd be appreciative if you sign up.
Great. Well, I'll actually put a link in the description below so people don't have to search that up. Thank you once again, Ed, for coming on the show and sharing your knowledge with the audience.
Entirely my pleasure, Jesse.
And thank you for joining us today. As a reminder, this episode is sponsored by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.